Can you hear me?
I can hear you.
Good morning, everybody. If you guys are there, let me know so we can get on with the daily plan. Anyway, I'm going to go on, and there's probably going to be people listening. So, welcome to the Friday Shoots and Ladders edition of Doc's Daily Plan. Yeah, there we go. Okay, I see people. And right now we're sitting kind of at an inflection point. Do we go higher and go to the gap fill? Or do we revisit on the way down? And for a more detailed version of that, that'll be available in my Substack for my subscribers and on my Discord. We're going to chop it up in great detail. Okay, so here we are. So, quick review of yesterday's market action in case you don't have enough PTSD from it, unless you're on the short side like Chewy. It tagged this kid's levels like, I don't know. I think he's gotten in with somebody there somewhere, like with the sovereign wealth fund of Saudi Arabia or something, that they kind of move the markets where he says it's going to go. But anyway, it was actually in my daily plan, but it just seemed kind of, anyway, with that said, so yesterday, quick recap. Around, we were kind of farting around 68, 85, 90, 75. We closed there. We lost 6,900 the day before, which was kind of like a danger zone kind of thing. And then the news that hit the tape that I saw was silver tanking, big silver short, some Shanghai investor, whatever, that precious metals, de-dollarization trade with the crowded gold, with the crowded silver, with the crowded commodities, with all this macro web of interconnectivity, something broke. And when one thing breaks in the web, the whole thing breaks. It's highly levered. And then we had that scramble. And that's what happens. Read Taleb's anti-fragile. That's not what we have. We have points of fragility in here. VIX went nuts, and we're going to talk about VIX in a minute. And once we gapped down, we kind of opened at 68.58-ish, right above 68.50, went through 68.50, and was pretty much down goes Frazier the rest of the day. Just kind of breaking through levels. And we bottomed out at 67.80, which was kind of where we bottomed out when during the Trump invasion of Finland, I think. Of Greenland, excuse me. During the Greenland invasion. And then we kind of came back up to 6,800. Quick lesson. 6,800 puts were sold. And we talked about this yesterday in the Discord, where we were going to pin. 6,800 puts were sold. Big level. They added when we were going down again. They keep doing that stuff. And we get the intraday updates, and, on the Discord, we talk about it. And so 6,800, when you have a positive gamma strike above you and you're near it, you mean revert and you drift right to it and just usually don't get to it. So First, we were flirting above and below it near the close. Then we went down to 67. These lines are emblazoned in my brain. Let me do it over here so you can see, so you don't get we went down, we undercut, we were down, and the debate was, do we go 85, 90? I said, no, we have to mean revert back up to 68, right towards 6,800. That's where we were. Amazon reported after the bell. The market didn't like it. They're spending $150 billion on data center capex, AI, like Amazon doesn't know what they're doing. I haven't added to Amazon in a long time. The last time I added to Amazon was when they bought Whole Foods. And everybody said, "Oh, Amazon is crazy. They don't know what they're doing. You know, they're not a retailer." Like they don't know what they're doing. They're just making shit up, right? No. So anyway, so that said, the market doesn't like Amazon spending billions of, $150 billion in this AI thing. We tanked overnight. We bottomed out in the overnight session way down here at whatever the 6730 equivalent. I didn't notice it until whatever time it was. I jumped on. I got some just little guys, MESs. I don't trade ES that much. I just do it to play. I got 5 MESs and see what happens. Got it down here somewhere. And then we kind of ground up, and here we are at 68.36, which is an important level, and we're going to talk about that in a minute. Okay. Let's see where we go from here. And then we have a few other things, announcement-y kind of things that we're going to do in a minute. And one of them is that the website is finally functional, yay, and we're going to talk about that. The other is that we're now on Instagram, and we need followers to be able to broadcast on Instagram to be able to reach a wider audience and hopefully help some people make money if they listen. And so, yeah, and then there's other things going on too. So with that said, let's go to a quick version of the daily plan, Chutes and Ladders. Remember the kids' game, Chutes and Ladders? We go up the ladder, down the ladder. I often talk in my daily plan about Chutes and Ladders and the levels that we go through, and that's available in my Substack and on the Discord for paid subscribers, a full plan with all the different levels that we are going to go through. And so gap up, gap down, gap up, gap down, price weight up. So yesterday we gapped down, all kinds of reasons we just talked about, from 68.80-ish down to 68.57. That's kind of where we opened. Went down. This is just a recap of what we said, of what I just said. So when I wrote this from 67.30, where we bottomed, we already went 100 points in the Globex section. So these are massive Chutes and Ladders moves up and down. So right now, where are we going? Back, bias is back toward maybe that 68.60-ish level where we kind of gapped down to where we opened yesterday, and we'll talk about why those levels. That also happens to be the top of the expected move. There's a lot of stuff going on there. We have a 50-day moving average in that neighborhood, so there's a lot of confluence there, either as a resistance or as a target, or both, or as an overshoot and undercut and reclaim. So now the gap fill gang was all pissed off at me when I said we weren't going to fill the gap down below. That was 168.25 a while ago, and we filled it. So now they have to be equally sanguine, saying we have to fill the gap back up. Or is it only a one-way gap theory? So we have a gap back up to 68.75.80. I don't know when. So that's our next gap target to the upside. Okay, let's talk about VIX. Let us talk about VIX. See, this keeps me on track. And this is a daily plan. If you subscribe free on Substack or on Substack, you get the free version of this, and then I kind of stop somewhere, and then the full version is available to paid subscribers in the Discord and on the Discord. Okay, so let's talk about VIX for a second. Which VIX dashboard? Well, let's use this dashboard. Okay, so first thing I want to point to, and I mentioned this yesterday, I've been harping on this shit for days now. I talk about this a lot. Looking at the VIX versus the VIX 9-day. If you're a short-term trader like me, and if you're listening to this broadcast, you probably are, You want to keep an eye on the relationship between the two and on the VIX 9-day, because the VIX 9-day tells us what the hedging demand is, the price of options, puts, volatility, think of it how you want. Go fast forward in the future, 9 days from now, and then the Friday before, 9 days from now, and the Friday after. That's going to be capturing next Friday's CPI, GDP, elemental P, whatever we have next Friday, and whatever hedging risks. And there's a kink in the yield curve, which we'll talk about, and we're going to, strategize how to trade that in the Discord. Probably we'll do some screen shares and talk about some diagonals, see if people, there's some ways to try to take advantage of those kinks in the yield curve. So we have VIX 9-day higher than the VIX, backwardation. Okay, so when we tip, we get kind of what we're seeing already. We get that volatility crush. Volatility tends to cluster. I've been talking about this for a week. So we had volatility warning tremors, and we clustered, and then we went down, and now we overshot to the upside maybe, and now we're trying to find a balance. When will we signal the all clear? I'll let you know. So here, what happened here? So right now, what I have here is nations indexes. The SDEX, which is like basically the one standard deviation out of the money, put normal hedging. TDEX, tails, like your 510 delta wings, and VOL-I at the money. Up until yesterday, most of the action had been the near the money volatility, the surface shifting up and down, but there hadn't been a lot of reaching for tails until yesterday. And that tells me that the end is getting closer to here. Buy insurance when you need it, not when you have to. The house is burning, so we're going to buy fire insurance. We're going to overpay for expensive wings. They're going to decay into next week, into whatever it is, or even the short 1 or 2 and 3 DTE wings. That's what happened. And here we are with a 100-point move, partially fueled by that. Okay. Can't cover everything here. There's just a lot of stuff that goes into this. Let's get back to we also can talk about, okay, breadth was weak. Finally, we had broad selling yesterday. Sasquatch came to and wreaked havoc on the camp. The whole IGV, AI is going to devour all software and Salesforce and all these $100 billion plus companies are going to somehow be erased by Chewy sitting in his office and like coding shit with AI. He's going to be the new Salesforce. So anyway, today is whether we rebound toward acceptance or it's just or we back on the chutes and ladders. All right, back on the chutes and ladders. Now we're going to shoot back up, and then the ladder back up, and then do we slide on the chute back down? More will be revealed. Okay, Amazon last night, as everybody knows, they didn't like the earnings. That's what contributed to that big drop. And then the volatility did its thing. We were just too over-vixed, and it just did its thing. All it took was a little buying spark to get us moving, just like it took the selling spark to get us moving to the downside. Okay, pre-market earners, I didn't really check. Kind of a broad swatch of VRTS, I believe, is a no, that's not the one I was looking at. GHM is a defense name that I like. MKTX, a dividend name. Anyway, I'm not going to go through all the different stocks. Insurance, CNC, so like UNH kind of name. And then we have the levels and lines. And then, of course, those paid subscribers get the detailed map around the trading view string. Let's look at the string again. And we're going to briefly look at the options depth. Now, normally I just look at it netting out the puts and calls. But I wanted to see what was really under the hood. Because in theory, it doesn't matter, but it does matter. And so what's under the hood here are puts. If we try and see the calls too, very little calls locally. A few calls, between 68.05 and 68.25 where we are. Few calls over here at 68.35 where we're stalling, but we also have long puts here. So that's a big inflection point of the deltas. We have sold puts at 68.60, kind of like they sold the puts at yesterday's open, 68.60. I don't know what they got for them. I hope it was a lot. And now we're traveling all the way back up there, so that's a potential stall zone. And so here's what the main zones are: 68.25 to 68.60. Positive gamma on either side of them, sticky, trying to break through them. Bulls need call buyers to step up in the shoots and ladder zone. So here's our main shoots and ladder zone, 60 to 25. Below 25, a lot of sold puts, not bought puts, sold puts, positive delta, basically like an in-the-money call at 6,800, 6,805. So if you just look at OI, you might get one idea, but that's not what's going on here, folks. 67.85, 68.75, more sold puts. So we have 68.25 to 68.05, okay? We break below 25, which might not be that hard at all. We kind of have a test at the 6,800 round number area. If put buyers get emboldened, you break through it. If volatility goes up, you break through it. And we kind of level down here. In the meantime, you have, 75, yesterday's low, sold. 45, near 50 round numbers, sold, support. Got this cluster in here. If we go down, if volatility goes nuts, between 70 and whatever it is. And this is all written out in my daily plan in the roadmap. And down here we have all this. Okay, I'm going to turn the screen over to Bad Hombre. He's going to show us his version of this, and we'll talk about also some of the stuff we got going on.
All right, guys. So right now, ES is at 68.57. What I really want to see is price kind of hold this sticky 68.45 for a push up to 68.85. That's the first trade I'm looking for. If before open we're pushing up to here, I'm going to wait. I'm probably not going to take a downside play from here. I'm going to wait to see if we can break above. If we can break above, I'm really going to not be aggressive to target 69.09, 69.10, and then try to hold the position all the way to 69.25. That's kind of my plan A. If we do in fact reject from here,
69.25 for the S&P folks here, it's roughly 6,900 SPX, roughly that number.
Yeah, it's pretty close, and it's getting closer and closer as we approach May. The difference between ES and SPX.
Yeah, it's 22 last time I looked.
Okay. If we do reject from this area, I'm probably going to skip out on that trade. Can be a good trade all the way down to pivot, but I'll probably stay patient on that trade. If we do come down, I might take another long from 68.35 all the way up to the ceiling at 68.71. So in other words, I kind of see us chopping around if we don't get a nice pop or a dump right at the open. assuming we don't hold 68.36, I think an easy trade is back down to 6,800. 36 points right back down. I think that's a very, very easy trade. I'm not really bearish until we break 6,800 to the downside. So even if we come all the way down here, I'd still be looking for the upside.
So that was roughly yesterday's low during like the cash session.
Yeah, it is. Everything else happened beforehand. I guess yesterday's low was 67.80. So about a 20 point
6780 on SPX, so on ES it was 6,800-ish. The low that you're looking at.
You're right. That was all pre-market. You're right.
Okay. Then there's a pre-market noise, right?
Yeah. So that's kind of my plan. I'm optimistically bullish today. That doesn't mean that the downside plays can't be great. However, I do think we end the day nice and green.
Okay, great. You have some stuff to show us?
Yeah, go ahead and pull up the website, Doc. So that's all ready to go. You could go to.
Boy, now you're asking me to do some fancy tech stuff. Okay, hold on. Okay, yeah, I did it. Look at me. Where's my?
There it is.
Okay, there we go. So walk us through it.
Yeah, so the website's up and running. You can go to the website. You'll be able to sign up to the Discord. You'll be able to sign up to the Substack. They're the same product, just different doors. And then also, if you go all the way down, you can sign up for the up and coming Doc and I's kind of trading bootcamp. There'll be a wait list right down here where it says sign up now. And if you're unsure if this might be a good fit for you, you're welcome to scroll down even further and book a call with me or Doc. It's a 20-30 minute call just to see if it's a good fit for you, totally free of charge. And I think it could be very beneficial. Might not be for everybody, but if it's for you, would be a good time to find out.
Right. Well, we're looking to have it be a right fit. Obviously everybody doesn't do this, and the course is not trying to be everything for everybody.
Exactly.
Okay, so here's all that stuff. And soon we're going to have to add Instagram to this and YouTube. We'll have to add all that stuff.
Right.
Oh, speaking of which, I need you guys to do me a favor. If you find value here, like, subscribe to the YouTube, share it wherever you share it, put it on Twitter or send it to your Aunt Mabel, whatever, just kind of help us get some traction here so we can kind of keep rolling out new stuff. And
if you guys do use Instagram more than YouTube or X, there's an Instagram link on the YouTube. We're going to start streaming on Instagram as well. I'm not a big Instagram guy, but I know some of you are. So we'll just kind of diversify where we get our viewers.
I'm surprised my kids who are your age are on Instagram, that they kind of live on Instagram. But anyway, and just in the weeds Instagram stuff, apparently I just found out, maybe he knew it. We need 300 likes or subscribers. We need 300 something before we can go live there. Well, what do we need? 300 what?
Followers.
Followers. Okay, that's the word.
Yep.
Okay, followers. So when you go click that Instagram link, click follow. You don't even have to look at it ever. Just click follow and then never open it again. I don't care. Just click follow. There you go. Now there's my man right here. Let's make some money today. Now, you guys, some of you may know me by now. I sold a lot of puts really expensive into the teeth of that down draft. I put the trades in, people, in the Discord and got to see them. Probably not too many of them did it. That's okay. I get it. And the trades, I discuss why I did them, what my reasoning is, and it's mostly off of options depth. I'm also going to use other few things. We're going to use volatility. We're going to look at charts. We're going to look at multiple things and talk about it. And so just a quick idea. If you look down here, this is sold options down here. What do we see? And these were here yesterday. Some of these were here when we came into the day and they didn't close them. We see sold options, sold puts all the way down here. And we didn't break that, even with volatility spiking to 20, whatever it was. That shit's not going to break. That's not going to break. And so I was pretty comfortable selling stuff all down here, having all these blockers in my way. And when it moved against me, great. I sold more, I got more premium. That's okay. Also got some scalps, that's a whole other story, the long scalps, targeting, heading back up. So yesterday was a decent day money-wise, catching the downside and selling some out-of-the-money stuff and sweating a little bit. Today will be a much better day, monetizing all that crap. Yeah, so that's what we do. Val, you have a couple things to say before we wrap up?
Yeah, I can go over a couple of things, although we pretty much covered most, but a bit of a skew maybe that you guys didn't touch base on.
Because volatility is doing crazy stuff, so go ahead, talk to us. Let me get you on this.
I'm sharing the screen, so put me on.
Yeah, okay, get me off. Okay, go ahead.
Yeah, so first of all, I talked about the Qs yesterday, QQQ, saying that's like the weight on the market came from that index. We saw some preliminary positions in calls for the complex of February 5 and 6. I showed it yesterday, and those positions are still there, even larger. Now, what I show now, I prepared at 4 a.m. Eastern. So obviously the market moved by then, but we still go over it. The first thing interesting is the skew model, this blue line that you see right here, and it basically yesterday was elevated to the left, indicating those big dumps that were about to happen with the VIX hitting 22, 24, I don't remember exactly. Today, the elevation is to the call side. So now things look pretty aligned to the call side. So this can be both from out the money speculation in calls, but also because of bid pressure that covers shorts. We did like 100 points. So that can generate call buyers that are basically closing their positions. Now, we don't know who's opening, who's closing in that sense, but either way, they're both designated as buyers. So the main level for today, the market could easily do SPX 6850, 6860, pretty easy. Above that, it needs real buyers. I doubt there could be a short squeeze without any significant news, something that Trump and his friends can cook. So 6850, 6860 is, pretty obvious. Above that, again, we get into positive gamma, calls, puts, more condensed, a bit more difficult to push that, but they can do it even now pre-market. The higher we go from here pre-market, the higher the odds of a dump at the open, which will bring us down to, let's say, 50 points lower, and then the friends of bad hombre will come in and buy. So I can see these from various different angles. I just showed this. These models, first being the candy wrap, we still have that uneven configuration where the upside is compressed, the bands compress, but the downside is still open. Not like it was yesterday. Yesterday was screaming short. Today it's still open to the left side, right? The bands are not compressing to the left side like they are to the right side. So there's still some fear in the market, but I think those are weaker hands rather than the stronger hands we had yesterday that pushed the market down. And it's not balanced yet, but the bands to the upside do compress, but they come, far away, starting at 60, 69, let's say 6,900 or so, 6870, 6880, right? There's a lot of way to go up before we really hit that wall of compression. And looking at it from another angle, again, here we can clearly see a significant position at the 6850. Doesn't really matter if it's calls or puts. I designate it as call buyers because the green bar is larger than the red and the skew around this area is elevated. So in my eyes, the intention here was call buying. And so we have that level again. And finally, let me show one more thing here. Looking at it from a different angle, we can see, first of all, we have very, very strong support, or at least the market expected to be at 6750 and 6760, where these left side spikes are there, very large in the money, right? They're under spot, very large. The values under spot should be negative, but they are actually positive here. So market expects that level to hold no matter what. Even if the market goes down, it expects it to bounce back up. Then you have this hurdle up to 6820 or so, and from 6825 you have an open road until you hit those upper resistance levels, be it 6850, 6870, so on. So it looks like there is a collective interest for the market to be around 6850 or higher for as much as possible for this Friday expiration. Most of the puts were sold yesterday over the last 3 days. Sold meaning customers selling. Yesterday had the highest customers selling out the money puts, and so in my eyes, that pretty much puts a floor, at least from their perspective. And as long as the market holds 6,800 and above, especially 6,820 and above, those puts will decay. And then maybe the market makers, then maybe the market does a move down, like at the last hour or last half hour, right? After those puts already lost all their premiums. But from a collective interest, I think the market wants the SPX to hold 6,800 and above for like the whole day, right? Doesn't matter
Okay.
exactly which level, but just above that level, and the market could just stay here between 6,800 and 6,850 for all the day, doing nothing.
Good, thank you. And just to bring it back to the chart for a second, so there's that 6,800. To the right, think support resistance, not really, but kind of.
This is market makers.
Yeah, this is market makers position. Market makers long 6,800 bigly. Here is 6825, some long, short magnet up to 35 where we are now. Ricochet to 6850, 6860, kind of stally. Here's the main action. So the main action zone and the local action zone is 25 to 60. The wider action zone takes us down to 6,800. And this whole area that we've been talking about, 25 to 60, is kind of thin, other than 35 first target, up or down chutes and ladders, and maybe get up to 65. So if you're trading ES, add 20, 25 points to that, 65, 85, 90, whatever. In here's where the action is. And, here we are, 68.75, where we closed the other day. And then, of course, we have 6,900 round number zone. And that's kind of where the action is. That's kind of the way the day goes. Now, if you want the full above chop zone, below chop zone roadmap daily plan, that's on the Substack. And if you want to join the free Discord, which is going to be happening eventually, I have Chewy. He's working overtime doing all this stuff that you kids know how to do, and see what the environment's like. The link will be down below once we get it set up. And that's where you're going to see the intraday pivots, real-time updates, because what we see here is not going to be what we're going to see in an hour from now. This big chunky stuff will stay. These big institutional trades, they stay. These colors don't run. But in here locally, you have someone coming by, a couple thousand calls or puts right near we are, and VIX goes up and down. That's where the action really is. It helps determine the direction of the day. And we can only do that real time, and we do that real time in the Discord, with voice and screen share and text and charts and all that crazy stuff. Anyway, thanks a lot, everybody.
Thank you.
Wait, hold on. Where's my media assets? Hold on.
Intelligence is not a privilege, it's a gift.
I think fast, I talk fast. I love this game. I live this game.
Bye-bye.
Bye, everybody.